Hello and welcome to Business Morning. I am Bisi Adebayo. Let's kick off with oil prices, which are down more than 2% in early trade today as new lockdowns in Europe to halt surging infections of COVID-19 sparked concern about the outlook for demand, while markets remained on edge over drawn-out vote counting in the U.S. election. US WTI was down 2.7% at $37.73 a barrel after dropping 0.9% on Thursday, while Brent crude was off 2.6% at $39.88 per barrel, having fallen 0.7% in the previous session. The Organization of the Petroleum Exporting Countries and Allies, including Russia, is expected to delay bringing back 2 million barrels per day of supply in January, given the decline in demand from new COVID-19 lockdowns. And providing some support for the market, the U.S. inventories of crude oil plunged last week, although much of the fall was attributed to production being shut down as another hurricane swept through the Gulf of Mexico. And back home, the Abuja Electricity Distribution Company says it plans to install about 101,000 new meters before December 2021. The program, bankrolled with the federal government's 40% shareholding, was designed to help meter all electricity customers to check the incidence of crazy bills through estimated billing system. At the launch of the National Mass Metering Program in Abuja, the Managing Director, Mr. Ernest Mukwaya, explains that the new metering scheme kicks with an official order from the Nigerian Electricity Regulatory Commission, mandating the electricity distribution companies to commence implementation.
We'll be able to acquire 900,000 meters, which will be enough to not only meter everyone, but even replace those defective meters. This will cost in the region, the estimated cost is about 63 billion, but we believe that the next phase of procurement, which will be competitive and the government initiative of ensuring that the meters are manufactured in country, the price will dramatically drop so that there is value in the economy. The first phase, which begins today up to end of December, we are geared to install 101,000 meters. The program is very comprehensive because it will cover not just FCT, Kogi, Nasarawa, and Niger State. By metering customers, we create transparency in in electricity transaction. We create willingness for customers to pay because they can now be able to relate the consumption of units and what they are paying, as opposed to estimated billing.
And staying with electricity supply, the federal government recently reiterated its commitment to put an end to the estimated billing regime in electricity supply in the country, with a promise to distribute over 6 million electricity meters free to Nigerians. President Muhammadu Buhari says the meters, which will be locally sourced in the Presidential Mass Metering Initiative, will meet the national deficit and impact an estimated 30 million homes across the country. The president of the Renewable Energy Association of Nigeria and a member of the power sector group at LCCI, Mr. Segun Adaju, joins us now to shed more light on this initiative and electricity issues in general in Nigeria. Good morning and thank you for coming on the program.
Thank you for having me.
Now, I'd like to start by asking you, what is the true state of Nigeria's power sector today?
All right, thank you so much. That question would probably take a whole day to try to dimension, but I'll try and make it brief and short. So we have about 208 million people in Nigeria, estimated household over 30 million. And we have, at the last count, the best energy that we generated recently, 5,450 megawatts, which shows the very huge gap between demand and supply. The average international standard is, I think, 1 megawatt for about, if I'm correct now. I mean, for example, we should have about 208,000 megawatts of electricity. So if we compare ourselves to other countries like South Africa, for example, we'd say about 50 million plus of people, and then they're doing about 45,000 megawatts, almost one-to-one. Okay, that's the yardstick, international benchmark. So there's a huge gap between demand and supply. That's one. The second is that there's been several attempts to, get Nigerians powered, privatization, having, private sector players come in. We thought that could probably have, changed the game right now. But the current situation we're having right now is, number one, there's dearth of investment in the sector for so many reasons. The investors are saying, I cannot see how my money will come back if I invest in this sector. So we're having the issues of complaints about the tariff not being cost reflective. So you're buying something, a product for 10 naira, and you are regulated to sell for 5 naira. I mean, it's a loss already on day one. Then there are issues of what we call losses. I mean, ATC and C, we call it, average technical and commercial losses across the value chain, at times up to 40%. In plain language, you generate electricity. So I produce bread, for example, 100. I send those bread to the market, and then I get maybe payment for 60. So across the value chain, losses from technical, from the grid challenges, losses from people not paying by passing meters. So it has become an issue of a chicken and the egg, which comes first. End users are saying, I am not getting the right service for the bills you are sending to me. So that's where the concept of service reflective tariff came in. That's, look, deliver service, I'm willing to pay, and then bill me appropriately. The other side we've also seen is the issue, and maybe that takes us to narrow down our discussion. Out of these 30 million estimated households, I'm not too sure we have up to 6 million meters. All right, so there's a huge gap of people who don't have meters. And then they are billed by what we call estimated. Some use it crazy. Of course, if you have received that kind of a bill before, you probably scream. But let's look at the businessmen. So I've sent out 100 bread, and I can only collect through prepayment, which is prepaid meter, for 10 bread. The 90 that is left, I'll just check how many people do we have that bought this bread. Just share the balance of the cost amongst them. I'm not looking at whatever you consume or not. Either you took one bread or two, you might end up paying for the price of 4, because I don't have a way of getting my money. I have to get my money back. So it's been this issue around the electricity sector in Nigeria. But recently also, a new development in the sector where I play, we're already seeing that distributed renewable energy, for example, and renewable energy generally is an option. I'm sure we'll talk about that later.
Yes, indeed. We'll get to that in just a moment. So let's now talk about the mass metering program scheme. Can you actually expatiate on what this initiative is all about?
All right. So recently, just about a week ago, the federal government came up with a new scheme, a national mass metering program. And the objective is to say, we want to introduce transparency into the system. We want to get more Nigerians properly metered. And so many objectives, for example, trying to create jobs, and I'll explain why. Try to also make the sector commercially viable for investment. So using my usual case study. So I'm selling this quantity of product. I want to ensure the money comes back. So we're expecting that this program should be able to make that happen. Now, what does it entail? It's in 3 phases, phase 1, phase 2, and phase 3. And ultimately, it's expected to roll out, say, about 6.5 meters over a period of 3 years. Phase 1 is up to December, maybe an extra 1 or 2 weeks, 1 million units. We have 11 discos, so maybe average of 100,000, for each of the discos. Abuja disco started, Lake Ikeja started already. And the idea is that end users can access, new meters without putting down some money. That means you don't have to pay for it right now, but in one day you can request for a meter, and then you get a meter installed in your house in one day. That's the design. And then it helps to also, like I said, transparency. There is a facility that has been put in place by federal government through the Central Bank of Nigeria for discos, meter asset providers, and what we call meter service providers also. So based on some terms and conditions put together by CBN, a disco or a MAP, meter asset provider, can approach CBN, get some funding to acquire the meters, and just deploy immediately to customers. And then they pay, of course, there's an agreement between CBN and the meter asset provider or the disco, okay? Like I said, one day you're expected to get it rolled out, and then it increases transparency. Many benefits. One of the features is that all the meters under this scheme must be sourced locally. So a good opportunity for the MOJECs, local meter manufacturers. All the meters must exist in Nigeria right now. Either they have been imported in or they are produced locally. So it should create more capacity for meter providers that have been crying all the while that, look, you have given us license to produce meters, and then you dropped the import duty, you waive 35%. So competition is tough for us. So that means an imported meter might be cheaper than my meter, and then I'm out of business. So now under the NMPP, you have to buy your meter locally. So it will increase the capacity. We're already seeing investment coming into some of these companies. I saw FBN Quest Merchant Bank saying $1 billion we're willing to finance producers. Thirdly, it will create jobs. So these meter companies will employ more people. The installation also will require technicians and installers. One strategy that is, the federal government is looking at. So for me, it's a good initiative. It should introduce, more transparency and increase revenue in the sector. However, my worry will be how it's going to be implemented and what are the issues.
Now, talking about some of the issues now, there have been varied comments on the scheme implying whether the meters are actually free or whether there are some charges that are, hidden maybe along the line when you want to purchase your credit. So can you actually shed more light on that? Is it free or not?
Okay, I hear that. Nothing is free in Freetown, really. Okay, so in a commercial venture, somebody will have to pay for a product. So even if an organization is giving free, in quotes, let's say palliative, somebody has paid for the rice, the noodles, and then distribute to them for free. In this instance, and so from my own understanding, the meters are not free. Okay? My own understanding, the meters is at no cost of acquisition to the customer. So that means if I need a meter today, I can approach Ikeja Disco and I can access a meter today without putting down the cost of that meter. But there is also a strategy for discos and the meter asset providers to recover their money. This cost will be inbuilt into electricity tariff. So over time, if I'm buying a token of 5,000 naira, maybe 200 naira from that token will go into the repayment of that meter over a period of time. The tenure of the facility by CBN is between 5 to 10 years. So that means Ikeja Disco can recover its cost of investment in this meter that I have given to the customer that you think it is free over time from the bill that they are paying. That's the strategy.
So technically, it's not free.
As a businessman, technically, it's not free.
All right. So what would be the implication of this on the availability of electricity to consumers? Because that is very key. If I'm getting a meter and it's not free, so to speak, but how does this improve the availability of electricity?
Okay, for me, I see, like I said, I think it's a positive development. So people who complain about crazy bill, estimated billing, number one, is a relief. Having a prepaid meter takes you off that threshold of people who will get any kind of bill, maybe for what you have not consumed. Okay, so we're expecting that people will have more meters, more households will be metered, and then they can request for tokens. So I pay ahead 5,000, I have this unit. Okay, that's number one. Number two, we're expecting that discos and investors in the sector will see the roadmap of their money coming back, their investment. So you're investing $1 million in this business, you are beginning to see how it's going to come back. Because all prepaid meters, you have to buy a token before you start using electricity. is the postpaid that are estimated and that you have to pay after you have used. So I get my money up front as an investor in the sector, and then I can deploy more energy, and then I can serve more Nigerians. So we expect it to increase electricity generation, because more investments should come into the sector. The sector should become what we call cost reflective, and we also believe service reflective. More people will ask for, grid power. It should generate more electricity for Nigerians.
And that brings me to the issue of the increased tariffs. Now, what's your view under the service reflective structure? Actually, how viable is it to increase prices with the poor state of power supply in Nigeria?
Right, okay, so I'll use a comparison between the sector, the grid, using gas or hydro and renewable energy, and also maybe generators. So right now, Nigeria is seen as one country that has one of the lowest electricity tariffs. Many people might not agree, many people might not believe, but we seem to have, and that's the argument of discourse, that tariff is low.
But the power supply is also low.
Right, I'll take it on both sides. Okay, so the tariff is low, so I cannot invest more money because I might not make money, and even the investment I'm putting down might not come back. That's one. On the other side, customers are saying, look, the service is poor. I don't have up to 4 hours, 2 hours maybe. And even the ones I have, for majority who don't have prepaid meters, you are charging me crazy bill for what I'm consuming. So it's on both sides. Okay, but so the issue now is that Nigerians, I also believe strongly, Nigerians will pay if they have service at the right time and at the right quantity. Let me use generators, for example. And we have millions and millions of generators in Nigeria. People are willing to buy fuel in their generators. So if you calculate the cost of electricity per generator, it's running up to 120 naira per kilowatt hour, at times 180 naira per kilowatt hour for mini grids. So let me use 100, between 80 and 100 naira per kilowatt hour. Meanwhile, the grid service reflective tariff that we're looking at is between 50 and 60, and people are saying it's too much. But the challenge is the availability. I'm willing to pay 80 naira per kilowatt hour using my generator. So that means I should be able to, and I should be willing to pay 60 naira per kilowatt hour for grid supply. If I get it at the right time when I need it, I'm assured of 20, 24 hours of electricity. There are estates in Lagos, in Lekki, that's already paying higher than what the service reflective tariff is. Okay, so that's the challenge, that people actually want service. If you deliver service, they will probably throw away their generators, which is more expensive, and then connect to the national grid. So that's the argument of, is it cost reflective and service reflective, or the chicken and the egg, which one comes first? Yeah.
All right, we need to wrap up in just a minute, but just before we do, tell us what alternatives the consumers have to power their businesses apart from generators. Of course, let's also forget that the price of petrol was recently increased as well.
Right. Okay, so it's very straight, and I'll use myself as a case study, and also my baba in Magodo. I've been running on solar power in the last 7 years. It's going 8 years now. I don't have a generator. For the last 6 years, I don't have a generator. I'm connected to national grid. I've been guaranteed of minimum, in the last 7 years, I confidently tell you, I've been guaranteed of 99.9% of electricity. Because I have solar panel on my rooftop, I have battery backup all through the night. The barber shop I'm also referencing also runs on solar. So the renewable energy technology is also gaining ground. I'm also happy that the federal government is also looking at that direction. There's a 5 million solar home system rollout that's been done. There is solar connection facility. There are mini grids that Rural Electrification Agency is rolling out, showing clearly that renewable energy is an option. You can displace your generator, like I've done in the last 7 years, by deploying solar power at a cost that is not as high as my generator. It might not be compared to the grid, okay? It might be higher than the grid. But I have comfort and convenience in my house. The barber shop also has the same. You can use it to generate more money. And then the whole world is going renewables. Climate change is an issue. And it's an alternative that I definitely recommend for everyone.
All right. We'd like to thank you, President of Renewable Energy Association of Nigeria and member Power Sector Group of the LCCI, Mr. Segun Adaju. Thank you for coming on the program.
Thank you so much for having me.
We'll beam our searchlight on diaspora remittances when we return in just a moment. Please stay with us. Welcome back. Earlier this week, the World Bank predicted that inflow of diaspora remittance to Nigeria will drop by $2 billion in 2020 to $21.7 billion, as against the $23.8 billion the country recorded in 2019. Nigeria remains the largest recipient of remittances in the region and is the seventh largest recipient among the low and middle income countries. The World Bank attributes the declines to weak economic growth and uncertainties around jobs in migrant-hosting countries, a weak oil price, and in many cases, remittance source countries, and unfavorable exchange rates against the dollar. Well, joining me now to talk about the implications of all of this for Nigeria is the head portfolio management at Commercial Partners, Victor Aluyi. Good morning, Victor. Thank you for joining us. Now, let's get your thoughts on this latest projection, bearing in mind the already dwindling revenue caused by the fall in oil prices and the COVID-19 pandemic.
Well, I think the projection is essentially in line with, the global situation and how, the global economy has essentially had to slow down on the back of the COVID-19 challenge. It is important to state here that there are no idiosyncratic factors, or there are no there's no one that has been spared essentially. So it's basically been a global phenomenon. If you look at, for context, diaspora remittances have basically grown from a little over $5 billion in 2010 to just over $17 billion last year. That's a compounded annual growth rate of about 13.5%. That number averagely over the last 10 years has averaged about 1.75% of our GDP. So diaspora remittances have become a significant and a major part of the economy in terms of assuaging the weak incomes of a lot of Nigerians. So it's a key part, but I think that this projection is essentially on the back of the significant slowdown that we are seeing in the global economy. So that obviously is going to have its impact, and I think it's pretty much in line with what we expect.
But before we got to this point now, would you say that we have done well in terms of utilizing previous remittances that have come into the country, or have we been solely dependent on oil revenue?
Well, if you look at those remittances, they don't necessarily go to the coffers of governments. These are remittances that go directly to the beneficiaries. So you have a broad array of Nigerians in the diaspora. So these are incomes or remittances that basically go directly to their family members for the purpose of investment, sometimes savings, sometimes carrying out projects, or just basic income support. So this has not been something that goes to the government. However, I think that there are ways that the government can tap into that by creating schemes or special purpose vehicles that would channel those diaspora remittances into real investments here in Nigeria. And obviously that would have a positive impact on the broad economy. So I think in terms of policy, in terms of direction, I think there's a lot more that government can do to harness this major resource.
And so what strategies can actually be adopted to harness and attract more diaspora investors, particularly in key sectors like agribusiness, health, education, and power?
I mean, like I said, we have a diaspora commission in Nigeria that can work with, maybe the Ministry of Finance or the Ministry of Trade and Investment to create special proposed vehicles or programs that allow these remittances to probably be invested in areas like real estate, in areas like agribusiness, like you mentioned, in areas like healthcare. I think that there's a huge potential that can be tapped from that. Also, there can be the issuance of a diaspora bond that had been mooted in the past, but I think that was kind of shelved. But I think that those are some of the initiatives that can be revisited that I believe would help harness those diaspora resources and help to essentially have a positive impact on the broad economy.
Now, over the years, it's been widely established that a larger chunk of Nigeria's remittances flow through the unofficial channels. How can this be tackled?
Well, I think that it still boils down to a lot of financial inclusion. I think that the Apex Bank has done quite a lot in that area to have a lot of the unbanked people to come into the banking sector. So you have a lot of those flows coming through, money transfers. You have a lot of those coming through third-party movements. So I think that as the financial inclusion drive of the Apex Bank continues to grow, that would obviously significantly tackle that issue and bring more people into that official net or that official channel.
Well, let's talk about the impact on the external reserves now. Do you think that previous remittances inflow has not eased off the pressure on the reserves?
It hasn't, and I don't think that it will, because those remittances are funds that essentially go straight to be deployed. So you have situations where there are people who send monthly support income to families. All of that basically goes into spending. There are some of those remittances that go into some investment, maybe real estate investments and all of that. So all of that basically goes to be deployed and spent. So it doesn't necessarily have any impact on those reserves.
Now, when you look at our diaspora community, it's actually made up of legal and illegal migrants. And the federal government's record certainly would not take into account the illegal migrants. But how can we truly capture the true value of remittances to the country?
I mean, that's a tough one to do, really. At the end of the day, you would have to be tracking flows through the banking system that come through money transfer agencies. That's one of the most viable and probably most reliable ways that you can track it. There are several other means through which money comes in from the diaspora that would be difficult to track. So I think the best bet right now would be to look at the flows that are coming in through the banking system via those money transfer agencies. That will serve as the best proxy right now in terms of what we're seeing in terms of diaspora remittances.
Now, some have actually argued that the country reaps double foreign exchange from remittances of its citizens abroad, more than what is accrued from its crude oil exports. Do you agree with that?
Well, I mean, if you look at the sheer size of those remittances, like I said, just last year we had over 17 billion coming through. It's a sizable number, but again, I don't think that it stacks up against what we're seeing in terms of the inflow from crude oil. I think overall, what those remittances serve to do is to a significant portion actually assuage the income shortfall of a lot of lower income families here, whilst also going into areas of investment, particularly for people in the diaspora that are looking to build some investment back here in the country.
Now, Victor, a part of the World Bank report now, I'm sure you must have seen it, says that the fall in remittances is expected to further lead to an increase in food insecurity and poverty. What can the federal government do to change this?
Well, like I said, those remittances essentially go into a sizable chunk of it going to support families with low income. So clearly, with a reduction in that, you're likely to see an upsurge in those poverty numbers. But I think that a lot of the direct interventions that the CBN has instituted in trying to support small businesses, particularly in the wake of the whole COVID-19 challenge, I think that should help to ameliorate whatever issues that we're likely to face down the road. It certainly would not completely take it away, but at least it would help to reduce the impact that we're likely to feel.
And what role would the strengthening of mobile money regulations and identity systems also play in facilitating digital remittances?
I think it just still goes further to entrench, the financial inclusion plan or financial inclusion play for the monetary authorities. I think, the more of that we have, it would certainly enhance even greater remittance. What it would do is that it would enable the authorities to better track and better follow indeed how much remittances we truly are seeing. So it will basically create another channel through which those remittances can be better tracked and those records can be better kept.
Now, just before you go, Victor, how well will the U.S. election impact remittance inflow, looking at the fact that households try to use it as a socio-economic support system?
I'm not sure that the outcome of the election has that sort of direct impact, really. I think It's more around how the economy globally is faring. Truth of the matter is that as the global economy starts to improve, say from next year, we're certainly going to see a recovery in those diaspora remittances. So I'm not sure that the outcome of the election necessarily has that sort of direct or significant impact on those remittances.
All right, thank you. Head Portfolio Management at Commercial Partners, Victor Aluyi. Thank you for coming on the program this morning.
Thank you for having me.
In other news now, the Chairman, House Committee on Capital Markets, Honorable Babangida Ibrahim, says lawmakers plan to address issues relating to the market with the aim of boosting investor confidence. Honorable Ibrahim, who was speaking at the 24th Annual Stockbrokers Conference, also says the Chartered Institute of Stockbrokers Bill is coming before the National Assembly soon. Let's take a listen.
You can only drive the economy through the capital market, because that is a place where most of the people that have excess funds, if you don't have excess funds and you want to invest your money for a return, that's the area you're supposed to go to. You see, we have noticed for some time after the capital market crash, a lot of Nigerians have lost confidence on the markets. That's why they prefer to keep their money in the bank or to go into other investment rather than go to the markets. But what we are doing in the House is that we are trying to look at what are the issues. Because before the COVID-19, we wanted to plan an international investors conference where all the key players were coming to discuss what are the challenges. Are they policy? Are they legislative? Or are they operational? So that when we discuss all those issues, if it has to do with legislation, the National Assembly is ready to look at those areas that require amendment in order to improve the efficiency of the market. If it has to do with the policy, we advise government that social policies need to be revised. If it has to do with the operation of the market, then we ask the key players, please, these areas we need to improve on it, because the investors have lost confidence because of lack of return on their investments. So these are some of the issues we are looking at, and we learned that the CIS amendment bill is coming to the National Assembly. There are a lot of challenges associated with the bill, but what we learned they are doing is discussing within the key stakeholders that have some reservations on the bill to discuss so that all of them will be on the same page, so that there won't be a little wrong by the time the bill is presented to the House and stakeholders are invited for public hearing. So I think we are trying our best to make sure that we boost investors' confidence in the market and also address most of the key challenges that hinder the efficiency of the market.
All right, it's time to review yesterday's trading activities at the NSE, and Edidiong Iwang will be doing that for us. Good morning, Eddie.
Good morning, BC. Well, investor sentiment in the markets was generally weak yesterday as the all-share index dropped, although marginally, by 0.01% to 30,738.92 points. However, the month-to-date and year-to-date gains still stand about at 0.7% and 14.52%. The equity cap was at 16.06 trillion Naira. Activity was quite high yesterday. Volume increased by about 50% to 430.12 million units, worth 6.09 billion Naira, traded in 4,319 deals. Now, sectoral performance was mixed yesterday. Banking index was up, consumer goods was down, industrial goods was unchanged, insurance was down, while oil and gas also gained. But let's talk to Mohammed Kayode, the head securities dealing at APT Securities and Funds. Good morning, Mr. Kayode. Thank you for joining us on the program.
Good morning.
Transcorp yesterday notified the stock exchange that it had acquired Afam Power for about 105.3 billion Naira. Now, we saw the stocks of the company jump by 9.8%. What would this acquisition, do for the company? What would it mean for the company and shareholders?
Okay, thank you. It's a pleasure to be here with you people. What happened yesterday was a combination of renewed interest of the government to transform entirely the power sector. And that is why this transformation is taking place now. The Transcorp has now keyed into the transformation agenda. Now they are acquiring AFAM. And don't forget that they also acquired Ughelli power plant in 2013, and this has formed a kind of cash cow in for the company for Transcorp group. Now acquiring more of acquiring AFAM now is now boosting their revenue sources so that it can increase their bottom line. So if this is done, and you look at what they are doing in power sector now, the new tariff is now cost-effective tariff that can boost the company income at the end of the day. So if this thing is being acquired like this, and the tariff that is being leveled on it will increase the revenue and also the bottom line of the company at the end of the day. So it will increase the profit for the company. So profitability is what the shareholders are looking for, and that is what they are going to get if this transaction continue and they were able to go on with the store capacity of this AFAM.
All right, let's talk about some earnings now. 11 PLC, formerly known as Mobile, released its earnings yesterday, and they weren't so impressive. What stood out for you the most in the numbers, and how do you think that will shape trading today?
Yes, and you call it 11. We in the sector we call it a double one. So now what happened in there? You see that there is a decline in their revenue by 19%. From 141 billion to 114 billion in quarter 3 2020. And if you look at also the PAT also declined more than what the decline we have in revenue. It declined by 35% from 6.3% in quarter 3 2019 to 4.1 billion in quarter 3 2020. This the decline is amplified by the expenses of the company. There's higher expenses on the side of the company. They are spending more than what they can generate, and that is why you see a situation whereby the revenue declined by 19%, and why you have an EPS declining for 35%. Now, as it is today, the EPS is declining from 17 naira 6 kobo to 11 naira 43 kobo. So what this means to the company is that there is always a reaction towards that, because the speculator and also the investor will also be disappointed with this outcome as regards to what they decline in quarter 3. What it means is that the price of the stock may go down further.
All right, so yesterday we saw Boa Cement drop by about 0.11%. Now the value on the stock, accounted for 2.2 billion naira of the total value of trades yesterday. Do you have any idea what led to those declines on the stock yesterday?
Yes, I think there is a cross deal between the major shareholder to another shareholder. So the crossing happened within the trading session. You can see they crossed about 50 million at 45.45. So that made it to lose that 5 kobo that it lost yesterday. It's not that there's any issue on it, but rather the major investor is selling while another investor is taking up the one that was sold. So the crossing it was as a result of crossing about 15 million from the major shareholder.
All right, Mr. Kayode, thank you for your input on the program. Do enjoy the rest of your day and have a lovely weekend. Mohammed Kayode is the head securities dealing at APT Securities and Fund. We'll have to leave it on the market review for now. Over to you, BC.
And we'll be getting back to Eddie shortly, right after we do an opening call to London. To join us again. Now, let's bring in Juliana Olayinka from our London studio to drill down on this morning's major headlines coming from the UK. Good morning, Juliana. The National Audit Office is warning that billions of pounds worth of trade with the European Union will face significant disruption when the Brexit transition period ends in January. Can you tell us more about that?
Well, really, Bissy, the National Audit Office are confirming what we've already known. I believe it was a couple of weeks ago that part of the government's own worst-case planning scenario documents was leaked to the British media. And within part of those documents, it did suggest that perhaps 40 to 70% of lorries that will be travelling from France into Britain wouldn't be prepared for these new custom controls, which will take effect at the end of this year. And perhaps in a worst case scenario incident, there could be queues of up to 10,000 lorries trying to get into the UK. So the National Audit Office have said that the government really aren't doing enough. There are several factors here. There is not enough crucial IT infrastructure to make sure that lorries and businesses are prepared and can go through these new robust measures. Transit areas for lorries are not ready. They also mentioned that there aren't enough customs officers. They haven't recruited enough individuals so that this can take place. And really, the NAO have said that this is because of COVID-19. And whereas a lot of attention was focused before the pandemic took grip, it hasn't been the case. A lot of people have been working from home. Then there is an issue with the withdrawal agreement. We know that Boris Johnson and the British government decided to tear up pieces of that withdrawal agreement to ensure that Northern Ireland does remain completely under I'm not sure what term I can use because it's such a confusing Northern Ireland protocol. But the fact that Britain have tried to rip up the withdrawal agreement does mean that there may indeed need to be checks from goods coming into the UK from Northern Ireland, because at the moment, of course, we know there is no hard border on the island of Ireland. Brexit does get people muddled up from time to time. There is only 8 weeks to go, and this is a huge issue. And the government are saying that they are doing their very best. They have actually released a statement, which I will read. They said, "We're making significant preparations to prepare for the guaranteed changes at the end of the transition period, including investing £705 million to ensure the right border infrastructure, staff and technology is in place." They've also said, and I'm sure many of our viewers in the UK would have noticed, that they have spent millions on boosting lots of campaigns on radio, on TV, to ensure that businesses are ready. But the government's own National Audit Office said they're far from ready, and they're only 8 weeks to go.
All right. Now, some people really seem to be taking undue advantage of the COVID crisis. The British Business Bank, which administers the government-backed loan program, says 20 lenders had blocked a total of 26,933 fraudulent applications to the Bounce Back Loan Scheme between May and October. How did this happen, Juliana?
Well, as I'm sure we all know, criminals can always find a way to infiltrate some sort of economic system, and that's been the case with the bounce back loan. But I think particularly when it comes to the bounce back loan, it was because there was less vetting. Before the bounce back loan was introduced, there were concerns that a lot of small businesses who make up, the businesses here in Britain were not able to access loans because a lot of the scrutiny that lenders were putting in place was just far too much, which is why the government decided to make the bounce back loan pretty quick. You apply on a Monday, by Wednesday you could have £50,000 in your account. And we did see a couple of weeks ago that the government's own Office for Budget Responsibility did warn that about £26 billion would be lost in the bounce back loan scheme, not just because of fraud, but because people just wouldn't be able to afford it. And now it has been confirmed that 27,000 applications since the start of the scheme in May have been rejected. And if they were to have been paid out, that would have cost the government, or the taxpayer most importantly, £1.1 billion. I think this information is really coming out now because we know that we're in a lockdown in Britain at the moment, or in England for the next month. The Chancellor Rishi Sunak has announced that a lot of these loans and these schemes and these grants that have been available will be extended. And there are concerns that the bounce back loan may indeed become compromised yet again, and whether or not lenders, and 90% of the 5 biggest lenders in this country are the ones that have been paying these loans, can afford it. I know that NatWest, HSBC have spoken out saying at the moment they're not taking on any new applications, that they've been completely inundated. There are concerns that people are taking loans and they're not going to be able to pay them back. But the fraud matter is a serious matter. But on the good side, they have stopped these claims. But considering it is going to be extended, will people try to infiltrate the system again? And I suppose the answer to that question is obviously yes.
All right, Juliana. Now, finally, this might not be good news for prospective pilots with this warning from the pilots union asking them not to start any training courses, else they would be left with huge debts and no prospect of employment. Is this all about COVID, Juliana?
It is all about COVID, and it's quite a sad situation because, of course, you can imagine trying to be a pilot or having dreams to be a pilot does take a lot of hard work and lots of sacrifice, and it costs a lot of money. It can cost up to £100,000 to go through pilot school, and BALPA, the pilots union, have released an unprecedented statement. They've actually called it unprecedented themselves because it's not something they would want to do, but they said they are asking pilots not to go to these courses, to perhaps wait a while until the industry gets back into pre-pandemic flying. And we know that we're not expecting that to be the case for at least 3 or 4 years. This comes as 200 EasyJet trainee pilots. They had completed their training. They were offered the job. And then just a couple of weeks ago, they had those job offers withdrawn because, of course, we know that flying isn't the same as it was, and in November there's an international travel ban for people flying from Britain. Now there are 10,000 out-of-work pilots across Europe at the moment. It had already been an issue before the pandemic. The pandemic has really opened the eyes to just how bad this situation is at the moment, and there are 1,600 trainee pilots that are out of work here in the UK, and it can only get worse. So BALPA, the union, are asking trainee pilots to keep the money in the pocket and wait for the time when people are flying again.
All right, Juliana, thank you. Do enjoy the rest of your day. We'll see you much later.
Thank you.
All right, let's get back to Eddie to take us through the debt and currencies market.
Thank you, BC. Well, the fixed income market yesterday was mostly positive as we saw average yields decline at the bond market, the Nigerian Treasury bills market, and the OMO market. But let's talk to Bankole Odusanya, the head of fixed income at UBA. Good morning, Bankole. Thank you for joining us on the program.
Good morning.
Yeah, so what should we be expecting from activity in the market as opportunities thin out?
Yeah,
Hello, Bankole, can you hear me? Okay, I guess we've lost Bankole there. The bond market was bullish yesterday, although it maintained its quiet trend, but it was bullish as we saw yields decline by about 4 basis points. Now, we saw a lot of demand on the April 2049 bond. We saw 18 deals on that bond alone. There were 33 deals worth 12.76 billion naira. The Nigerian Treasury bills market too was also bullish yesterday. Although we didn't see a lot of activity, but then there was demand for the 28th of October 2021 deal and the September 2021 maturity. I hear Bankole is with us now. Good morning, Bankole. Can you hear me?
I can hear you. Good morning.
Okay, so I was asking what we should be expecting from the fixed income market as yields continue to decline and opportunities continue to thin out.
Yeah, on the short run, you expect continued bullish trend. There's still a lot of funds in the system, about 800 billion coming in from maturities and all.
Well, I guess we've lost Bankole there, but then BC, we'll just keep our fingers crossed and see what happens in the market today.
Yes, indeed, Adidjung. Let's just wait and see just a few more hours. Well, that's our program today. Thank you for watching. I am BC Adebayo.